We bought our forever home 18 months ago, and we're due in June to renegotiate our mortgage deal on it. It was on a fixed rate for 2 years at 2.4. Obviously,
nice.
as we've just suggested, the rate's gone up considerably, which might mean £300 or £400 a month increase on the current mortgage that we've got. My husband's self-employed, I'm employed. Our wages haven't gone up, considerably. So we're wondering how we can mitigate that increase. We've thought about whether it might be extending the period of the mortgage or maybe interest only for a temporary period, but we wondered if there was any other options.
I mean, Maxine, you're thinking along the right lines. Extending your terms exactly what I would have spoken to you about, depending on how long your term is. Definitely explore what that looks like. You'll be surprised what a difference that can make to your monthly payment extending that term. Interest only, there is the mortgage charter there to help and protect you at the moment so that it doesn't affect your credit score if you go interest only for a brief period of time. Again, it will dramatically decrease your payments for that period, but of course you're not paying off the balance, so it's a short-term measure, might help you put a bit of savings in the bank just to help a little bit. But it is really about looking at your outgoings. You said it's your dream home. So we definitely don't want you to be thinking about having to leave that when you've worked so hard to get there. So it's about thinking long term as well. What are the things you can do to your monthly budget to help?
So, what about transferring if she's got savings, transferring them and getting an offset if she has a new mortgage?
Yeah, absolutely. If you've got savings, you can reduce your balance. And any time you're reducing your balance is a good thing. You can do an offset mortgage, that's right. And that's where your savings, actually, you don't pay interest on the amount that's left on your mortgage. So say you've got a £100,000 mortgage, 50 grand of savings, you'll pay interest while those savings sit in there on the 50 grand. So saving is crucial. And
you don't get interest for that 50 grand, do you? But
no.
It just comes off the
Exactly. So there's lots of creative options. The best thing to do is get advice because they can look at your situation and deep dive into it with you, and then you can feel more in control, more confident.
So is it possible then to do an interest only for just maybe like that 2-year period and see how the interest rates settle?
So the mortgage charter will allow you to do it for 6 months, but some lenders, depending on how much equity you've got, where those savings come in, will let you do it for the term. They'll just want to see how you're going to pay it off eventually, because what we don't want is you coming to the end of the mortgage and you've got your dream home, you don't want to sell it, and you've still got to pay that balance eventually. So they'll look at how are you going to do that.
Right, OK. So it's probably a good point in which to examine our finances a bit closely and see where we can make cutbacks.
Definitely, and we all can. We think we can't, but we can. If you sit and write it all down and try and make it a calm, positive exercise that you're doing to improve your situation rather than the negative around it, which obviously is difficult, it can feel quite good to save money when you were overlooking it before. So hopefully there will be some movement there as well.
Yeah, OK, lovely.